Welcome to the IBC Roundtable. This is a segment designed to drop every Tuesday to teach you more and more about the infinite banking concept, to answer those questions like, how can I grow my policies? How can I learn to do more with what I have and master this process for me and my family?
There's not enough time on Thursday because Joey never lets me talk the amount of time I want to. You know that. You've heard this happen. But today and every Tuesday going forward, we're going to take those conversations that you're having with us and our coaches, and we're going to break them down, help you get over those hangups, make infinite banking simpler so that you can take action.
This week's episode, Russ and I dive into all the potential pitfalls of how your business could end. And did you know you could buy life insurance using the infinite banking concept to protect against that?
Yeah, we actually just did that on each other, Joey, which is really helpful as business owners that we are always upping the amount of coverage we have on our biggest investment, right? Because Joey, you literally are my biggest investment.
And that means a lot.
Literally. Yeah, no, you are. But I mean, I say that, I'm trying to be funny. I mean, I know I make shots at you waist sides from time to time, but I'm saying in reality, you are the largest investment because everything that we do together. And if you're not here to do it with me, the business will not perform at the same level. And that would be a significant impact. And I think as business owners, we miss that. And that's what today's episode is really trying to address, those concerns, how you can avoid those concerns, and what we did this specific week. So don't miss out on this episode. And don't miss out on taking advantage of our inner circle. That's where we allow you as a member to go deeper with us, to sit in on more of the Q&As that happen on the back end of this sort of podcast. So go right now to wealthwithoutwallstreet.com/inner circle and join up. Let's belly up to the table.
Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome into this episode of the Inner Circle. Okay, Russ, for those who are just joining us, this is our second episode that comes out each week, and it's our Inner Circle. It's for those who are going deeper into infinite banking. And today's subject matter, we're actually talking about...
Don't go dying, homie stallion. That's today's subject matter.
I think that's a great topic. That's a great way to say it. Because what are the possible things that could keep your business from continuing to grow? We're all optimistic, right? I think that's, if you're an entrepreneur, you have multiple businesses or even just one business, you're hopefully thinking, man, this investment, this asset that I've built is going to continue to grow. Because why? I'm engaged with it. I'm building in systems. I'm hiring the right people. This is a very valuable asset.
Are you building systems?
Me?
Yeah.
I'm hiring people that are building systems.
Well, I think I don't want to get too far ahead of ourselves here to assume that we have all of these things in place, because I think the part that we're talking about today, and these are business killers, right? I know that I said don't go dying on me, stallion, to start off this, and I'm not looking to kill you, by the way. But there are things that can kill our businesses. And that business may be, I mean, we have many businesses, our accountants and our attorneys that love us. We have a land flipping business,
That's right.
Everland. We have a financial coaching business, Wealth Without Wall Street. We have a short-term rental business, Wake Up in Birmingham.
Wake Up in Birmingham is just what it is today.
Yeah.
It could be Wake Up in Huntsville. It could be Wake Up in Montgomery.
I just wanted to wake up. Let's do it.
Let's get it going.
But there's many types of businesses, right? And we have different levels of involvement in each one of those, and some of which we are building systems in, some of which we have already built the systems. It is moving.
That's right.
There are parts of the businesses that you and I work in, and there's some that we don't work in at all. Like, I don't know when the last time I've done anything for Iron City Cattle. I don't even collect the checks on that deal.
By the way, I got one today.
Yeah, I love that.
It wasn't me doing anything, but Jamie brought me the check and said, hey, can you deposit?
Yes, we can.
Sold a heifer.
What'd you call it?
He sold a heifer.
Oh, I like it.
I love heifers.
Well, here's the beauty of that is that there's lots of systems that can be in place. And so I want to kind of talk about the different things that we build businesses. And these could be like a typical traditional business, very similar to ours, or it could be an investment business, things that you might look to protect yourself in, especially if you have partners. I'm going to say today's subject matter is more geared around having partners or key people working in the business for you.
Yeah, because at the end of the day, if you're just a solopreneur, somebody who is doing everything themselves, right? If you don't have an assistant, you are an assistant. You ever heard that saying? Right? If you don't have you don't have an accountant, you are an accountant. Like all those things are true. If you're a solopreneur, then the business lives or dies with you. So that's not really what we're talking about.
Well, today. I tried to become an accountant, and then I went through this thing called intermediate accounting. And then I decided I was a business management major.
Real quick. So, but that's what I just want to be clear on what we're doing here, who we're talking to, and the things that we need to be prepared for. So a buy-sell agreement is something that you're putting in place to protect in certain aspects.
Well, you're getting ahead of yourself.
Oh, okay.
You always do.
Well,
when you start a business, you have to create a couple things. Immediately, you create what? Articles of incorporation.
Yeah.
You have a federal ID number, and then you need to have operating agreements. You need to have something that's going to spell out how the company should be run. And if something happens, what do you do then? Right. So Joey and I just got finished, setting up a new business, a land business.
That's right.
And in that business setup, we had to create an operating agreement. And in the operating agreement, it's going to dictate and tell who's going to do what and what happens if whatever.
Right. Fill in the blank, the what ifs.
Yeah.
Yeah. So those are obviously, see, Russ, I'm just assuming people know that, and that's bad.
Well, that's one of those things where if you just started a business, maybe you don't have some of these things in place yet.
That's right. And those are good to have because they outline expectations, right? There's no more assumptions. I think that's a real possibility, is that people can go into business and assume things are happening. We talk about, people ask us all the time, how have we been successful as business partners? And
is that a question they ask?
I mean,
they're asking how is this
possible?
How did you make it?
Exactly. And most importantly, I think we've tried not to assume a lot. Like, we've tried to lay it out. And besides the fact that we're very gracious, I mean, at least I'm very gracious.
What do you mean by that?
I'm like the most gracious person I know.
You're going to have to keep elaborating on that.
I'm just joking. But, basically we've had to give each other a lot of grace along the way.
You're giving grace. Okay.
Exactly.
I thought you meant like you were gracious, like thankful.
I am that too. I am that. But okay, let's get down to the bottom of this. The reason why we want to protect our biggest asset here. And I talk about that. Why do we talk about your business being your biggest asset? When we're talking about financial freedom, we're on this goal.
For most of it, it is, or it should, or will become that, right? And our businesses are the things that we dedicate ourselves to a lot of times. It's the thing we spend the most time in.
We know the most about.
Yeah, or we're trying to.
And we talk about the hierarchy of wealth being the things that we can invest in, that we know about, and that we can have some control over. So your own personal business that you live and work in every day is the thing that you know the most about and can control the outcomes. The second part of that is taking it to the next level. We talked about this, where the 4 quadrants in the cash flow quadrant, being an employee, then going down to being a self-employed person, then being a business owner. The transition from being self-employed to a business owner is seeing yourself as part of the reason you're not growing.
All right, so let's break that down, because that's really where today's subject matter is really focused, is when we start that transition from self-employed. Give us an example of a couple of self-employed people.
Okay, well, a self-employed person could be a dentist.
Okay.
Right? They own a practice. They do have a lot of people working for them, but if they walk away from that business, there's nothing, nobody else can actually perform dentistry.
Yeah.
In the building, right?
Well, I experienced that with my wife. if I came to pick her up for lunch and there was still a patient in the office, she couldn't leave.
That's right. Yeah. Or somebody that has, I'm trying to think of anything in particular, but if a business.
How about a financial advisor?
Well, yeah. A financial advisor that 100% solely requires them to be present. Otherwise, things don't happen. That's not a business. That's a self-employed person.
real estate agent.
Exactly. 100%. 100% of their efforts are what produce the results.
So what is the process as they start moving from, it could be a land investor too, right? At what point in time they start moving from solopreneur, from the self-employed quadrant up into the Northeast quadrant as a business owner?
Well, I think they have to start figuring out what parts of the business they can start handing off that don't require them to be there. In fact, all cases for you and I, you find people that are much better at each one of those pieces so that you can be freed up to do only what you can do.
So what has been the best or most successful thing you've done so far, or you've learned about that's helped you do that?
Like a resource?
Yeah.
Oh, I think the E-Myth to me was number one.
E-Myth by Michael Gerber.
E-Myth, that's the really the picture that lays out for you how it's possible, right? Okay, first of all, I have to realize that I'm in the way. Even though I might be really good at being a technician in one aspect of the business, I can't be the whole business.
So for those of you who have not read the E-Myth, the E stands for entrepreneur. So the entrepreneur myth, this idea that I have been successful in one area, whether that was a real estate agent, whether that was a dentist, whether that was just, I started a new business, land business. And now I'm trying to move myself into the business owner seat, right?
That's right.
And there's a lot of different working parts that happens with that, because sometimes we could be great at one aspect of the business, but we don't think about all the other processes that have to come in place.
That's right. You have to break down the business in terms of those different tasks and hire yourself. This is what he talks about in the book. Hire yourself with a job description and all the duties of that job for each position, and then slowly replace yourself in each one of those roles. Because this is the whole point I'm trying to make about your business being your greatest asset, is if you can be that person that takes that solopreneur job or business that you've created and turn it into a true business where it runs without you being present. And I forget who's the person that gave us this definition, but if a business, you can leave it for a year and come back and it's at least doing what it was before or grown since then, you have a business.
Yeah, well, most people don't have businesses like that.
That's right.
If they quit working in them, they would not get better. They would get worse. Right?
That's right. And so, but that is the place that you could create the most passive income to get to financial freedom.
Well, and I think part of that is where we now start thinking, or what are obstacles standing in our way that's preventing us from being successful business owners? I think of business cycles, right? I mean, right now, think about where we are. If you own a business right now, most businesses are being impacted. They didn't think about this as being a seasonal part, right?
No.
But they're in a business cycle, and that probably a trough of it right now.
I would say a trough that is extremely deep, and we haven't seen it yet.
Right. Well, I mean, it depends, right? I mean, we have different businesses that are prospering during this time, but traditional brick and mortar businesses are struggling because there's not as much foot traffic as there has been.
That's right.
We know that there are seasonal businesses, and these things require capital. One of the reasons we're doing this roundtable every Thursday is to highlight subject matter that has to deal with what we're using as a foundational tool in our tool belt, which is infinite banking, which is whole life insurance policies. Right?
That's right.
So I think of the business cycle, and I think most businesses use different lines of credit to help bridge the gap, weather the storm during those low times, as opposed to storing money in checking accounts. Right. That's not really a beneficial place, but that happens too.
Right. And that's something we're going to talk about some today. Is that's almost like termites, right? In your bank account. A checking account is not even keeping up with inflation, and it's the lost opportunity is immense. So that's something we really want to cover today.
All right. So if you don't know how these business cycles work, if we haven't gone through them a couple of times, if we haven't experienced some of the low points where we were like, how are we going to make payroll? Right. And that's where the E-Myth book really kind of shine light on a couple of different scenarios where the business owner, which really was just a self-employed business person, that they were working at 10 o'clock at night, doing the books, stocking the shelves, doing all the extra stuff because they were short on money and they were worried about how are they going to make the bills. And I think what I want to kind of highlight today is we start moving into things like partnerships. Well, because partnerships are tough, Joey. I heard it said one time before, a business partnership is a lot like marriage without sex.
I would agree with that. I would agree. Absolutely. Especially the last part.
Here's the thing. You have all the financial obligations, you have the relationships that you're spending time with, but you're tying yourself. So when you go into partnership with somebody, there has some pluses to it. Give me some pluses for people who haven't gone into partnership with someone, and you can just share all the things you love about.
Well, I think by far the favorite part about partnerships, in my opinion, is that you can use each other's strengths, right? Russ, as you may well know, is a great thinker, idea guy. We call him idea guy for a reason, right? I will say this. There is no lack of ideas. I've been gone a couple days, going to golf tournaments. I come back and there's more ideas just in the last couple days that I come back to. I'm like, wow, where did all these come from?
So what I'm hearing you say here, because you're in the weeds, what I'm hearing you say is that one person can go out and play golf and the other person can work.
That is a huge benefit.
Okay, so
100%.
So that means one person can be doing a job while another is doing a different job as well.
That's correct.
You mentioned thinking. I like to do thinking, not do.
Yes, I would agree with that.
You tend to be a doer.
I'm more of a follow through, kind of get her done.
Well, and there's a benefit to a partnership right there. What are other benefits that you could think of? Because people, by the way, most marriages, right? I don't know the statistics, but 80% of all statistics are made up on the spot. So just throw this in your cap. But I think the latest statistic I heard was over 50% of marriages fail.
That's a true statement.
Well, if business partnerships are like marriages, what do you think the statistics are on business partnerships succeeding?
I would say they're at least that.
Yeah.
Yeah, for sure. So you asked other benefits, right?
Well, I want to hear some other benefits, and I want to talk about that because we're moving into what you and I have done in our own businesses. What could potentially kill a business, right? And I want to talk about that, but I want to make sure we're giving people full structure.
Yeah. So the other benefits of business partnerships, in my opinion, is you have different experiences. You have different, in a sense, I don't want to say Rolodex. Nobody even knows what a Rolodex is, but your connections and your,
I don't even wear a watch.
Not Rolodex, but your connections, that each one of us bring different experiences and different connections to the business.
Well, tell me why you and I, when we first started, we were self-employed.
Yeah.
We were sharing space, sharing expenses, but our revenue was held separately.
Yeah.
What is it that attracted you to going into partnership with me? Outside of the fact that I'm a thinker.
Yeah. I think the more we did business together, joint work, whether it was speaking at different events or opportunities, I started to see that, wow, he has some needs on follow through, some things that are not getting done that he would love to have done. There's opportunity for us to grow. And I, as you know, I was your client, so I didn't have nearly the breadth of experience and ideas. I mean, to grow the business, you have a lot more vision than I do.
Well, can partnerships help weather some of those storms we were talking about before?
Yeah, absolutely. I mean, there were times early on where we had to lean on each other somewhat. Like, hey, you had a great quarter and I had a bad quarter, or vice versa.
Lean on me.
And did I say you're excellent karaokeist?
Yeah, that's a great benefit.
I mean, so
All right, well,
don't forget that.
let's talk about some flaws though. Let's talk about things that do end partnerships. And so there are 5 business killers that we would talk about as it relates to business partnerships, businesses failing. And there's a lot of them, but I'm going to focus on 5. And I'm going to say these are the 5 Ds. We're going through the big D, and I don't mean Dallas.
All right. Okay.
So one of those would be divorce. But
yeah.
Talk to me about why divorce may be a deal killer in a business.
Well, I mean, I've not, gratefully, you and I, neither of us have had to consider this, but what the experience that I've seen others go through is the taxing on your time and on your money that divorce happens. It drains that person in all different aspects. And to me, that could be a huge hindrance in a business.
Okay. Another D is death.
Yeah. So we already talked about how business can thrive because of your differences and because of what your business partners bring to the table. Well, when one of those is gone, it leaves a gap.
Well, when you and I were sitting down drawing up the agreements, the buy-sell agreements, we're going to talk about that in a little bit. We were drawing up, trying to figure out what the value of our business was. I think we kind of skipped over that because it is our largest asset. We need to have it valued. Thankfully, we have somebody that can help us do that. And if you don't have somebody, you can reach out to them in our community. It's Justin Harris with Congruence. He actually has a skill set. He has tools available to him that can tell you what your business is worth, give you value to it.
Yeah, he's even got a report that will print out your potential issues, your blind spots, if you will.
So for us, finding out what our value of the business was really did shine like, wait, that's a fairly sizable number. We need to protect against that.
Yeah.
But if you were to die, for you listening this, you're like, okay, Joey dies and Russ is here. Well, obviously our podcast isn't the same because I don't have somebody to ask questions of and make fun of. But for more importantly, there's things that Joey does in the business that I don't, which are a lot of things actually. And if I don't have an agreement with Joey to protect the business, if he dies, then when Joey dies, the actual asset will transfer to his spouse. Now, I love his wife, Jessica. And if you're listening to this, we friends, man. But Jessica, her skill set is probably not yours. I mean, I have never worked with her on this specific area. We've worked with her in different areas, but I don't think you would want to work with Megan either. I'm not certain that they could do the jobs you and I have because we've been perfecting this skill for a long time.
Right.
So if you can see the problem there, if Joey were to die, I need to be able to pay his wife 50% of the business and give her a check. And then I need to do something else. But if that was a pretty big number, and it is, where do you think I'm going to come up with that money? Is it just readily sitting in a checking account somewhere? That wouldn't be a good steward of it.
Yeah, you can't be operating a business like that.
So you got to be prepared for things like that. One, you got to have the number in mind, because what happens in businesses is that they don't adequately value the business, and maybe they do draw up a buy-sell agreement and they don't update it. And then 10 years later, something does happen, and all of a sudden the wife is sitting across the table from her from her husband's deceased husband's business partner, and discussing the fact that I've got 3 kids and a mortgage, and I know the business is worth more than what this piece of paper says. And now they're in court.
Yeah, we got a pro tip on that, by the way. So when we dive into the inner circle, you need to be listening on that one.
Yeah,
that's some good stuff on that.
That's going to be a topic for sure. Really quick, I want to finish the other, and we got to jump into the actual discussion part with our inner circle members and get their questions on this as we start to wrap up just the podcast episode of this. Joey, what are the other 3 Ds?
So one is disability. So if one of us became disabled to the point where we could no longer work within the business and even a portion of the capacity that we're in, that poses a problem. Because again, it's you are missing that intellectual property. You're missing that addition to the business, and you've got to fill it in some way, shape, or form. So there has to be some way to compensate the other one.
Another one is disbarred, meaning that if the person that you're working with, there's a specific type of license that they have. Obviously, the disbarred we kind of more refer to the attorney world. But if there was someone loses their medical license, you're in a medical partnership with somebody. If you're in a financial practice and they lose their insurance license or securities license or whatever the business is, if they can't practice it, then now they've lost their value, and you don't want to be providing 50% of the revenue to someone who can't provide potentially their 50% of the value.
Right. And lastly, we're going to talk about departure. Now, I'm not as familiar with that one. Why don't you cover that one?
Well, departure is a really easy one, Joe.
If they physically couldn't be present.
They physically don't want to be present. Most business partnerships end not in death, not in disability, not in divorce, not in
disbarred.
They end in departure. One of two reasons. I don't want to be here anymore.
Gotcha.
Or I'm retiring, which is a sort of a form of option one.
Right.
But I'm leaving.
Okay.
I'm leaving this business behind me. I'm leaving on a jet plane, if you will. I don't know why all the song quotes are coming to my mind, but if we're leaving, then how do we sell the business? How are we going to agree to do this? I had a situation down on the coast of Florida where you had these two pediatric dentists that went in basically World War III. And one of them, when they drew up their agreements, one of them was going to earn a specific percentage of the money. The older dentist who was there was going to get a different percentage. Well, for the first 5 or 6 years, the older dentists, the way the calculation worked, they were making all the money. But then as time went on, the younger dentists actually started performing, and the way the calculation worked, they started making the majority of the money. Well, that caused a problem, a big problem. And those two were going head to head. Well, then they had to figure out, how are they going to sell the business? How are they going to divide it up at that point? Because they both had built it. I mean, think about this. If you and I decided you're going to take I was going to take the wealth, you're going to take the without, what are we going to do?
That would be a problem.
That'd be a problem.
No doubt.
Well, and so how do you value the business then? What is the strategy? And some people say it's a Texas Hold'em kind of concept where we come to the table. It's almost like a bluffing thing where you write your number down, I write mine down, and one of us has to accept it. So if I offered you, $5 million for the business, you have to say, okay, I'll take it. Or if you don't take it, you pay me $5,000,001. That was the way my wife's dental practice agreement was drawn up. If one of them wanted to leave, one of them could offer the other a buyout. If the one didn't want to take it, they could return the offer plus $1. So there are things that we need to think about of how that happens. And I want to prepare for some of the things that you and I have been working through in our own business, but I want to do that with community and through discussion. So if you're listening to this right now as we end this podcast and you're not already a part of our IBC Inner Circle, you can go to community.wealthwithoutwallstreet.com and join, or you can, if you're already there, you go to wealthwithoutwallstreet.com/inner circle. There's so many different ways to get there, Joey. I just want you to know that we have discussions like this on a regular basis. So we're about to end our podcast. Thank you for joining us. We'll see you next week.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry.